Oh man, so today you're in for a treat. You guys have been asking for it and I'm going to deliver. You've been asking me which stablecoin should we park our cash in or should we stay away? What are we supposed to do? We've got liquidity issues draining the market. Bitcoin 73 to 74% off all-time highs. Tether FUD, the Terra Luna collapse. What are we supposed to do? In this video, we're going to break down exactly what you should be doing in terms of stablecoins and how you should be thinking about your different options. Make sure you hit up the like button. Don't forget to subscribe. As always, this video is brought to you by BITGET. Links in the description. Get yourself signed up and get 10% cash back instantly. No VPN, no KYC. Great exchange. But today, we're talking about stablecoins. I've gone to the trouble of putting together a couple of slides because things can get a little bit confusing, right? So let's first start with what is the environment we're in right now? Well, we're facing a lot of liquidity issues, right? That's the main thing we've got right now. We've had the Terra Luna collapse. We've had the Celsius issue. I mean, plenty of videos about all of these, so you'll be able to find them on the channel. You've had the Celsius collapse. 3 Arrow Capital struggling, BlockFi, Nexo, Voyager struggling. We had the staked ETH drama, Tether fears, even as close as yesterday and today. Apparently there's a coordinated attack of crypto hedge funds trying to short Tether. The global economic slowdown with record inflation at 8.6% and Bitcoin retraced 73% from all-time highs. And this gets you worried. What happens if one of our major stablecoins collapses, just like we saw with Terra Luna, an $18 billion collapse? What could happen here? What impact would it have on you? And what should we be doing to make sure our money is safe from there? So what we're going to do is we're going to go through and look at the key different stablecoin options available out there. And broadly speaking, by the way, I can show you guys, there are like 50 plus stable coins you could be taking a look at. So just to focus this conversation and to make sure this video is not an hour long, we will be focusing on some of the biggest ones and the main ones really out there. If you guys want to discuss any others, feel free to comment them below and we can do maybe a separate video looking at your favorite stable coin. But in essence, broadly speaking, there are 3 types of stable coins. And the first is your classical fiat collateralized centralized stablecoin. That's a mouthful, right? So your things like Tether, USDC, BUSD. These are backed by fiat money, but they're centralized. They're owned by entities. And we're going to come on to that shortly. You then have something which is crypto collateralized, which is decentralized, right? Something like DAI from MakerDAO is completely decentralized. It's on the blockchain and it's backed by other crypto, okay? So there's no company or party which is responsible of it. It's decentralized, as you guys understand. And then you have something which is non-collateralized algorithmic, okay? So this was, again, Terra Luna, UST, and again, we know some of the challenges around that. So broadly speaking, those are your 3 broad categories. And where should you be parking your cash right now? Well, the first option is, and probably the biggest one, currently sitting at $66 billion in market cap, down from a high of $82 billion, is USDT, also known as Tether. Now, this project has the same parent company as Bitfinex, okay? So it's centralized. The first token was issued in October 14. But this is the stablecoin with the longest track record of all the ones we're going to be looking at today, okay? So it's got a very long track record and a proven history, let's face it. Now, if you go onto their website, it'll say all Tether tokens are backed at 1-to-1 with a matching fiat currency and are backed 100% by Tether's reserves. And we're going to come on to that shortly because what is all this concern around Tether? And I actually raised this back in September 2021 around some of the things I was a little bit concerned with. Some things have improved, notably, but others haven't. The other issue we've had is there a coordinated attack going on? You guys are free to go over to watch my video from earlier today. I looked briefly at the tweet from the CTO of Tether explaining why he thinks there's a coordinated attack and what's going on. And again, what impact could it have if $66 billion of Tether is wiped off? Now, if you go over to the market cap of Tether, you can currently see the retracement we've seen over the last couple of weeks. This is ever since the Luna drama, you've seen a 20% retracement in Tether. Now, this is a double-edged sword, right? It's good that they've never failed a redemption and they've managed to survive this 20% retracement. But also, what happens if this continues to fall? To set the tone a little bit more, this is what we see. This is what we've seen post the Luna drama. So these are all pretty much the coins we're going to cover off. You can see this was the point that UST started depeg, and then you saw how Tether had its depeg moment as well. Tether fell as low as 0.95, so a 5% depeg, and you saw more money flowing away from Tether into USDC, BUSD, and DAI, which became overpegged slightly, and then you can see that the Tether peg did indeed recover, and it's currently recovered as well. Hopefully that sets the scene of kind of the journey we've had since the lunar troubles. Now, coming back to here, so we're going to come on to some of these reserves. So they mentioned that this is one-to-one backed. Well, what you can do is you can go over to the Tether website and you can head over to their transparency page. And on their transparency page, they share their current balances. So you can click on current balances and you can scroll to the bottom. And in essence, what it says is they've got 66.9 billion in total assets, 66.8 okay, in total liabilities. That's the market cap of Tether. So they've minted that many Tether. And so what they're saying is we're 162 million in the green. Okay, so we're comfortable. We've got a bit of a cushion here. We hold more assets than we've minted USDT. So what's the concern? Why do people, including myself, have a little bit of concern around this? Well, you need to click on reports and reserves. And then you will notice they have these reserve reports. This is when an accountant or a third party will come and do an attestation to say, yep, you're right. As a company, you guys do indeed hold more money than you've minted, and therefore you are indeed one-to-one backed. Now, that's the first red flag for me, is these are not big companies. These are not top 4 accounting firms, and this kind of gets you a little bit concerned. My history, even in the corporate world, is even small deals, things way off, $66 billion, get vetted and due diligenced by the top 4 accounting firms. I know $20 million deals, $30 million startup deals, right? Which do not go through, will not have VC backing, will not have its next funding round without a top 4, at least 6 accounting firm doing the due diligence. So it's very interesting that they've got these kind of companies doing their reports. That was my first red flag early on. Then I want to look at the reserve breakdown, which is you can see that, yes, they're one-to-one backed, and 85% of this is cash and cash equivalents and other short-term deposits and commercial. We'll come on to that in a minute. Hold your thought. 85% is in cash and cash equivalents. Then they've got 4.5% in corporate bonds, funds, and precious metals. This is where I start to get a little bit uncomfortable. Why would you have 4.5% in corporate bonds, which we know are not considered always as very, very stable, right? It's a risk asset at times. Then you've got 3.82 in secured loans, and you've got 6% in other investments. And this is the kicker, including digital tokens. So they're taking your dollar when you mint it. You take Tether, and then 6%, okay, so 6 pence to every dollar goes into other digital tokens. So, when we're looking at the one-to-one backing, if you lost a 10-15% here and everybody ran on their Tether, that's a little bit of a problem. So when we're seeing 20% retracements like we saw in Tether, we saw 20% redemption. We went from 82 billion to about 66 billion. Tether were able to meet those requirements, right? They didn't fail on any redemptions, and they did indeed give everybody their dollars back up to that 20%. But that is because this 85% is quite comfortable. What happens if there was a bigger run? What if there was a bigger crash or something was to happen, or a coordinated attack which pushed through much more, 50%, 60%? Then how is their backing? How does it then last then? So that is my first worry. Then looking into this 85% here, you then want to dive into that. And what you'll see is 28% of that is commercial paper, 9% is in money market funds, 5% is only cash and bank deposits. Okay, then they've got 55% in US Treasury bills. So again, these are considered, yes, it's backed by the faith of the government. I understand. These are still better than the tokens, but still, it's not all cash sitting there waiting for you to ask for your dollar back. So that's really important to know when you're invested in stable coin. Now, the reason this video is so important is I know a lot of you guys who haven't looked into this stuff really huge amounts of sums in stable coins. I'm going to come on to my recommendation and what I personally, of course, do your own research. This is not financial advice at all, but why I personally would not be keeping huge amounts in stable coins. I'm going to come on to that shortly. Okay, so that is Tether. Now let's keep things moving. What's your next option? Well, your next option is something called USDC, right? And this was created back in September 18, so 4 years later after Tether, in a joint deal between Circle and Coinbase, okay? So they're backed by huge VCs, Goldman Sachs, Silvergate, US Bancorp, and again, they say they're fully backed one-to-one with cash and cash equivalents. They're sitting at $55 billion market cap. As I showed you here on the graphs, they benefited a lot from the recent Luna collapse because a lot of people started panicking about Tether and what I just shared with you, and they started moving across to some alternatives such as USDC. So a lot of influencers, a lot of people saying, yeah, move across to USDC, it's a safer bet. And why are they saying that? Well, let's take a look. Firstly, we can take a look at their attestation. So you can see here they have one every single month where they attest that they're holding enough money to back the 55 billion that is minted in USDC. Now, the good news here is this is done by Grant Thornton. Again, not a top four, but at least it's a respected name and something out there. It's a name which is backing, putting their name at risk now to say, yep, we've attested to the 55 billion there. So this is a little bit better than Tether thus far. Then you can head on over to this page. You can see, obviously, they've benefited here from, like I said, the UST collapse, and we're seeing more USDC mint over the recent period. If you scroll down, what I want to share with you is this. Okay, you can see the weekly USD reserves breakdown, and what you can see is as of June the 24th, 2022, they've got 55.7 billion in circulation, 55.8 billion in reserves. So they've got an extra 100 million cushion, similar to Tether. But what you'll be able to see underneath is they've got 13.8 billion of that in pure cash, and they've put 42 billion in short duration US treasuries. So again, still not all cash, which obviously they want to earn some yield on their treasuries. They don't want 55 billion sitting there, which I kind of understand. But at the same time, this is still better than Tether. It's not in a mixed bag of random stuff. They've got US treasuries backed by the government, and they got some cash. So at least it's a little bit more understandable and a bit more transparent, which is important. Okay. Now you can also see in just that week period, they issued 3 billion new USDC and they redeemed 2.5. So 2.5 billion asked for their back. So net change is they've increased by 0.6 billion in circulation. So they're seeing a positive movement, whilst Tether has fallen 20 billion. So people are coming out of Tether is what we're seeing as a trend currently. Okay. Keeping things moving, we then have something called Binance USD or BUSD. Now this was founded back in September 19, so it's the newest of them all so far on the centralized side of things. And again, owned by Paxos in a partnership with Binance, okay? So it exists on Binance Smart Chain, Ethereum, and Binance Chain, and it also has monthly attestations. This is a smaller project, so it's 17.6 billion in market cap. And again, they assure that they're fully backed with attestations as well. So let's see if we can go on over to the attestations, and what you'll be able to see, this is a Paxos attestation, and we can head on over to the relevant section. And as you can see, they've issued 17.6 billion tokens, and they've been attested to have 17.6 billion in cash or amounts backed by US government. So again, very similar to Circle, they're saying ours will either be in treasuries backed by the US government or in US dollars, okay? But it's a smaller project, which we need to keep an eye on. Okay, so that brings us to a wrap on our centralized side. What are the other options? Well, your other option, and the most common of which, is DAI, which is on MakerDAO. First token was issued back in December 17. It's an ERC20 token. It's pegged to the US dollar. And the way this works is it's completely decentralized. So no company owns it. It's all on the blockchain, fully transparent. You can see what's pegged on it, what's the reserve, what's the collateralization. It's all there. It has a market cap of 6.7 billion right now, and it's backed with a bag of other cryptocurrencies. Okay, so when you come onto the thing, you can see they're backed by a whole bunch of different cryptocurrencies, which you can go through and take a look at to see which ones are accepted. Okay, so this accept a bunch of different cryptocurrencies to back it. Now, it's important to maintain its value. What DAI does is uses something called the target rate feedback mechanism, TRFM, bit of a mouthful. And if the price target is below $1, then the TRFM increases so that the price goes back up. So it's like a little arbitrage. Now, this could remind you a little bit of something called Terra Luna, but the difference, remember, between this and Terra Luna is indeed it is collateralized. Okay, they do have collateral, and that is what Terra Luna was trying to do. And that's why this is our third category, which was something which is non-collateralized. And these are projects which are also known as algorithmically backed stablecoins. So this is when they try to use arbitrage mechanisms, and normally a sister coin, like UST had the sister coin, which is Luna. And they use the two to burn one and mint the other to create arbitrage opportunities to keep the UST pegged to $1. Now, we saw in the instance of Terra Luna that all this time they were completely algorithmic. They had no collateral. And then Do Kwon started building some collateral. At the time of the attack, they were probably about 30% collateralized, which is not enough. Other coins, including MakerDAO, are at least 100% collateralized. Now, there are other different, smaller stable coins which are over collateralized. And I think the theme is starting to become that, stable coins should be 200% or 150% collateralized just to give that extra buffer because crypto can be so volatile and have these massive, massive drawdowns. So what is the conclusion? Well, what I thought I'd do is I pulled together this table. And in this table, I've pulled together the 4 we've just looked at, and I traffic lighted it across each of these different metrics. So the first one, let's take a look at track record. So for track record, you've got to give a green light to Tether, right? They've been going since 2014 and they've not been busted. So they've been for a couple of bull and bear markets and they survived. Medium, USDC medium term, and DAI medium. Binance USD is the shortest, coming into play 2019. They've not seen the full fluctuations that crypto can experience. So this is their first real major test, apart from COVID. Then we can look at transparency. So Tether, I'd argue, has the least of transparency because you can see that they're in digital tokens. Which digital tokens are you in? Can you tell us? Which corporate bonds are you in? Can you tell us? We don't see that. USDC is clear, right? We can see where those cash is. It's cash or it's short-term treasuries, as is Binance USD. And then DAI is probably a little bit, DAI is perfectly transparent because you can see it on the blockchain, okay? So you don't have any issues with transparency with DAI. So the weakest of the link here is Tether. Then moving on to the actual collateral, the backing, Tether's is arguably one of the weakest, okay? So for me, Tether is weak due to what I said. They've got cash in digital tokens, they've got cash in corporate bonds, they've got who knows where, and we don't know what that is. USDC, BUSD, very clear and transparent. And then you've got DAI, which it is 100% collateralized. We can see it on the blockchain. But how are you going to back something which is supposed to be stable with some of the riskiest assets known to mankind in terms of altcoins? So that's a little bit of a tricky one for me, particularly given what's happened with Terra Luna. And that was a red flag for me with Terra Luna as well. When they backed it with Bitcoin, that was one thing. I was a bit, okay, fine. But then they started backing their reserves with Avalanche and other coins, and that left me feeling a little bit worried as well. Okay, we've done launch here in terms of track record. And then you want to look at the price peg to the USD. So Tether's fairly accurate. I'd give it an amber on the traffic light. USDC and BUSD is known as the most accurate, and DAI reasonably well. Liquidity, Tether perfectly fine in terms of liquidity, as is USDC and BUSD. But of course, Tether has the greater liquidity of these, and DAI is reasonable, again, only available on the Ethereum blockchain. In terms of decentralization, we know Tether, USDC, BUSD are all centralized, owned by entities, and is not decentralized at all, whereas DAI is completely decentralized, so they take the trophy for that one. And then we look at blockchains. And again, Tether and USD are pretty much neck and neck. They're on all the major blockchains you're going to want to use. Binance USD is okay, but it's only available on these 3. And DAI is only available on Ethereum, which is a limitation for a lot of people as well. Moving on to regulatory risk, you can see Tether and third-party risk, we'll do them together. Tether, it is, in the red here, high regulatory risk, high third-party risk, and much lower for USDC and BUSD, given their backing. Regulatory risk is medium for DAI. I'd rate it as a medium amber sort of level, and the third-party risk is low, apart from the systemic risk which could occur through MakerDAO or through Ethereum if any trouble was to emerge there. So there you go, guys. What is my conclusion? How do we wrap up all this data which we've just learned, and what would you be doing right now? My take on this is super simple, and it's not financial advice, and I definitely recommend you to do your own research into stablecoins. My view is, if you don't need to be in stablecoins, don't. That's my first recommendation for myself, right? Stablecoins are a means to get somewhere. It's a utility. If I want to go from fiat currency into crypto, I'm going to use my stablecoins, okay? Now, if you find yourself needing to use stablecoins, which should you use? For me personally, I'd rank it as USDC first, then BUSD, then Tether. And again, I would diversify my split. I wouldn't go all in on any one of those just to spread out my risk, and I would not have huge amounts sitting on any crypto and any stablecoin for a long period of time. Now, a lot of you be asking, what does that mean? What about yield? How do I make yield? How do I make money? Now is not the time for that. And this is really, really important. This is not just about stablecoins. This is about wrap tokens. This is about bridges. I mean, we saw the Harmony 1 bridge was hacked. The Horizon bridge was hacked for 100 million. In this time where you're in a suppressed bear market, when liquidity issues are strapped like we've just discussed, it's not worth you, in my opinion, taking the risk to get a couple of percent yield or to get some, a little bit of yield that this company is offering, or making your money work. It's not worth it right now. I'd rather hold on to my 100% collateral on a hardware wallet, at the very least a software wallet, and live to fight another day once we get out of this bear market. Now, once you're out of the bear market, once Bitcoin's back above 35, 40, and we're comfortable and liquidity's back, by all means, go ahead and get your 5% APY, get your 6%. But is it really worth it right now? For me, the answer is no. I never felt comfortable in UST, leaving loads of money in UST on Anchor Protocol. And I do not feel the same leaving it in USDT on some sort of lending platform just to earn 5% on my money, particularly not huge amounts, because that is where, if a company collapses, and you've seen with Terra Luna, you've seen with Celsius how quickly these things can freeze. You wake up one day, they freeze your account, and now you don't know when you're going to touch your funds again. And you imagine you've got hundreds of thousands, if not millions of dollars in there, if some of you guys have your life savings in there, and you can't access it, all because you were chasing that 3% yield, 4% yield. You're better off sitting on your cash, waiting for the bear market to end, let liquidity come back in, and then you can take a little bit more risks in terms of APY once things are more comfortable. And it's the same for anything. It's the same for any of these yield bearing activities, which I know a lot of you guys are still doing. We're not in that kind of a market where I personally would be taking risky bets, yield farming, or looking for crazy APYs. I'm happy owning my coins, DCAing into Bitcoin, Ethereum, not even altcoins, and keeping things really simple in this market. Hope you guys found this useful. If you found this useful and you like this type of content, make sure you smash up the like button and subscribe. This one took quite a while to put together for you guys, to put all the data into one presentation so you guys know exactly which stable coins to look at and which are the best ones for you to be holding your cash in. Again, just use them as a necessary evil. Get in, get out. If you're getting into crypto, go into your end crypto. If you're trying to get back out, get back to fiat and sit on fiat. And that's it. Don't sit on stable coins. Don't be there forever. At the moment, let these companies stabilize, let them figure out what's going on, let them get through the liquidity crisis, and then we can work our way back to the upside. As always, guys, smash up the like button and subscribe. Do check out BITGET, links in the description. You'll get 10% back in cashback instantly on whatever you deposit. Absolutely no brainer, so at least do that. And I'll see you in the next one.